The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I am here with two more stocks to put on your aggressive growth radar screen. Let's get right to it. The first one is Elevate Credit, and the ticker symbol for that is ELVT. This is a Zacks Rank #1 strong buy, and it has an A for growth, as just about all of my aggressive growth videos will have. This one has an A for value, which is fine. Normally I see an F right there for value because I don't like value stocks. I'm more into growth, and value investors and growth investors are looking for different things inherently. So let's take a look at why this stock is Zacks rank #1. So we can see earnings estimates have been ticking higher here. You know, for the last for this year, we see the number move from 73 cents kicking up to 78 cents after a brief stop at 75 cents. Next year, we see the same thing, $1.06 running up to $1.13 with that brief little intermission at 108. We've seen some pretty big beats here. If we look at this quarter, this NA right here should actually be a 100%. Let's do it like that. 100% surprise there because they're looking for 0 cents break even. They got a penny. That's 1 penny above. The division, tends to keep that as a NA, but it should be 3 of the last 4 beats, and they're all very big beats. 260%, 100% here. This miss here was pretty dramatic here, where numbers are looking for 13 cents and they only got a penny. So kind of a feast or famine type idea inside of the earnings estimates, and whether or not they make the quarter or miss it. You can see this isn't really that long of a stock here, so we haven't been around for that long. But pretty much a good history here, and the stock really after the last quarterly report, which would be right here, which was a beat. You can see it's really started to move higher here. That's just what you want to see on a name like this. Stock reacting well even after the fact of the earnings. Obviously the markets was a little bit softer here, so we saw a little downturn. Financials have reported pretty well so far in this earnings season. So this consumer loan and consumer credit type play looks like a good one to me. Keep it on your radar screen, and it's Elevate, ELVT. All right, running ahead to the next one, we've got the beat, and it's BioTelemetry. BioTelemetry, and the ticker symbol is BEAT. Beat. It is a Zacks rank #1 strong buy, and it has the divergence that I love to see. A for growth, F for value, because who wants value stocks when we're looking at growth names here, right? All right, let's see. Why is this a Zacks rank #1? We can see that the 2018 estimate has moved up, and away, 5 cents here. And next year, look at that, a little bit of the wrong way here, 47 from 50, which is kind of a move down. But if we look at it from the perspective of the Zacks rank, which only looks at things from the last 60 days, so that number was $1.40. That technically is a move higher to $1.47, even though it's come in from $1.50. So a little bit of the nuance there of the Zacks rank for you. This is kind of let's see, I'm looking at the wrong thing here. That was the most accurate, the earnings ESP thing that we like to look at here. But 3 of the last 4, this was a miss, have been beats. So beat, and a beat right here, positive average earnings surprise of 21%. That's a good number here, but let's take a look at the chart. This thing really looks good on the chart here. We can see just a nice steady move up. Estimates moving up. Something like that is the type of thing where if you have the patience and if you see a dip at any time, like take a look at this dip. If you bought this thing down here at in the 25 range, in the mid 20s there, you are a 100% winner here at the 50s. So if you catch any sort of small dip on this thing, you should be a buyer because this thing has the estimate growth, it's got the revenue growth, it's got the growth style score, and it's got a great looking chart with estimates moving higher. Well, that's it for this week. Be sure to join us next week when we take a look at 2 more aggressive growth stocks to put on your stock radar screen.